presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, good, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day, and we are going to be kicking into 2023. So let's make it a great one, folks. Always do your best. This is the perfect card for today. You know what I did today, folks? I picked out 4 cards in the deck. Then I shuffled them up, and then I picked one out. And it's so wild, because this is the one that I thought would be applicable. But here we go. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself fully be alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out here. We have the Dow Industrials down 282, Nasdaq's off 102, S&P's off 38. Gold contract up $1.80, trading at $18.27 an ounce. We have silver down 15 cents, $24.09 an ounce. Light sweet crude up $2, 80 cents, $80, 40 cents a barrel. Notes and bonds. The 10-year note down 10 ticks, trading 112.03. The 30-year off 25 at 124.23 in King Dollar. King Dollar's down 263 ticks, trading out at 103.573. Euro is at 106. Yen is at 131.07, and the British pound is at 120 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, bottom line, the SPY out here, you got a sideways movement. You're down 360. You know, you're below actually the low, even the highs of yesterday right now. We're at 379.82. Well, the low is 379.08. Bottom line, you get an ABC structure down. The B point on this is the 377.85. Right now, we're at 379.95. We go take a look at the NDX 100, and the Qs are the weakest out here, folks. The Qs are going to just get slammed beyond belief. That's what it looks like. So the Qs, the bottom line, the B point on the Qs, 266.95, we're 294. The October low is 254. Your price projection is 244. So when we bring this up, take a look at what 244 is here. Bottom line, the highs of the lows are 219. So you, let's see, there's 244. So we're talking about, we're going to the highs of the lows of March of 2020. And that is going to be quite a deal. And, you know, the bottom line is it'd be hard to break that down because of the fact that you have the aspect of so much volume. So what happens is that when you have a lot of volume, folks, right, is that if you're looking for a market turn, what you want to actually happen is that you want this to be fast and furious without stopping, getting down to those points. See, the longer that you stop, what has happened here is this. This is what the most dangerous part of the market is right now, is that we have gone sideways, okay, basically building cars for like 6 months. That's how this shakes out. You know, if we take a look at this, you'll see the low that was established in June was 269, okay? You bounce all the way up to 334. You bounce back down to 367. You go, we bounced again up to 396, but you didn't move. That is what makes it so dangerous, meaning that what you get is that you get the aspect that the longer that you can build cause, it's like working out. The bottom line is, let's say, whether you swim, laps, whether you run, whatever you want to do, the longer that, you're basically building cause, there would be training, then you get the race, then boom, you come out of it, and you really get some action going. We go to the gold contract, we take a look at the gold contract. What we have with the gold contract out here can't move. That's the bottom line. And that's with the dollar down out here today. So if we take a look at gold, what you're going to see out here is we had the first, there's 1, 2, 3. You had some strength here, but each and every time it got weaker and weaker. Okay, so the big strength out here was on the 13th. The 13th of December, we got to 1836. You did 231,000 contracts, right? Then you try to basically break it, and you didn't make it to the high with 197,000. So you go 197,000 versus 211. And then we get over it, but yet it couldn't hold price. Now watch this. 160 versus 197 versus 230. What does that set up? That's telling me we're going to have a pullback. And it's going to be all about the downdraft, the ABC structure on the way down, which is confirmed. And my take is that we're going to have gold and silver pullback, is the aspect of what we have here is this dollar somehow is going to bounce. Because we know that the market doesn't like a dollar when it's going higher. Now, today, it doesn't like a market that the dollar is going lower. Now that certainly can happen, 1 or 2 days. Some of the higher volume equities out here, you have Tesla's flat. You got Amazon down $1. We have, there's not much movement out here, really. You get Intel up 15 cents. Verizon's flat. You got, let's see. Let's go inside the Dow Industrials and the strength versus the weakness inside the Dow. Point-wise out here, what we have is this, is that you have Chevron putting 6 points in, JP Morgan 2, Boeing 2, taken away from it. Home Depot, minus 37, Big Mac, minus 25, Travelers, minus 13. Inside the NDX 100, the strength versus the weakness there. You have Lucid up 1%, Dexcom's up 0.7, taken away from it. Rivian's down 3%, Mercado Libre's off 2.9, Cintas is off 2.1. And JD is off 1.9. Let me just go look at this Cintas for a second, because Cintas, we're looking at this, and this is, okay, so it can't make the high. Okay, this could be the beginning of this. This is an important one to look at, folks. Because what happens there is that if we're going to come into a recession, you're going to see Cintas at much lower numbers, because what happens there is that that's when retail places start closing down, companies start closing down. They don't need as many of the products that Cintas has. And Cintas has just about everything. Dow Industrials right now trading down 223. The Nasdaq's off 80. S&P's down 29. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Cakestat's Tiger Forex Report. Teddy Cakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading down 198. You get the NASDAQ off 71. S&P's off 27. So let's go through. We're going to go through this gold contract and the dollar. And we have a question, does the Fed keep gold down? My take is that it doesn't. So where I'm going with this whole deal, folks, is this, right? So picture here. Let's pull gold up first so you can see this. This is... Okay, so if we take a look at gold, and I'm going to put this on we're going to do a much longer basis here, okay? This is a continuous contract. I'm bringing it back 20 years. Come on. Stop thinking. There we go. Okay. So we can see the bottom line. This is pretty cool, actually, because I've had the gold report for 22 years. But you can see right down there, gold was $319. We get in at $282.50. So you had the first leg. The first leg in gold took you from 252 is actually low, 252 all the way up to $1,920, right? And the last leg up, if you did get the gold report, the bottom line, the last leg up was a 1 to 1.618. We actually got out of everything at approximately, I think, 1750 maybe. Great, it was a great run. That's the bottom line. Now, when we take that, and watch this, when I take it and we put it up in the aspect, well, what gold ended up doing was it did a 50% retracement, which is beautiful. I mean, because the bottom line is that I suspect what we have on a larger basis is a monster ABC up. Okay, but let's break it down as to where we are right now. So we did a 50% retracement. If we take it on that aspect, we're dealing with about 2250 to 2500. Okay. Now I'm going to bring this a little bit closer. So if I bring this closer, now I'm going to bring this back to 10 years. Okay. And what you're going to see, when we do 10 years, the bottom line is that you came, we came back to strength. Okay, when we came off the lows in 2018, okay, that low there was 1161. It shot straight up to 2063. That leg there, now watch this, because this is really, you really want to understand this, because this is how strong gold actually is. So you can see that leg there only did a 0.382 retracement of the move. Now, gold goes up again, and as it made its second top of 2078, it couldn't hold price. That's the bottom line. Volume was lighter, though. Volume was lighter. So now what ended up happening? Well, we ended up doing a 50% retracement. So when I'm looking at this, that's telling me, number one, we want to pull back. But I'm going to stay on the bullish side for a second because I'm a bull on gold, just not right now. And, okay, so watch this. If you take that low there that we're looking at, just the aspect of this would be the closest that an ABC would be happening, okay? So we take the top here of 2063, and then we're going to basically, that's the B point, and we're going to take 1161. That's at 902 A to B. Well, if I take that bottom there, and I do 1613, you have $2,515. Now, the cool thing about 2515 is that on the monthly basis, it's also running around 22 to 2,500, okay? So now let's go. Now I'm going to go into the GLD to show you where my head's at. Markets are always deviant, folks, okay? So if we look at the GLD, so the GLD, what the GLD is, of course, that is the ETF structure for gold. And the reason that we're looking at this is because what happens is that you can see all the volumes on it, okay? So picture this. The first high in the GLD was 194. The second high was 193.30. And you see how we had an expansion of volume on the second one, but you couldn't break the price. Now, you actually would have broke the price. And this is where this gets a little dicey, but I'm going to go slow here so you can understand how this works. This high here is actually a high, even though when you look at it on the chart, it's saying that it didn't break the price. And this is why. So let's go like this. 1, that's 5, that's 10, that's 15. Okay, good. That's 20 months. Now, what you have to do is you go, the GLD has an expense ratio, I think it's 0.75. It's 0.40. So you get 20 months with so the bottom line is that that's more than 1.5 points, okay? Because the expense ratio, so you have to take that into consideration. Okay, so what does that leave us with? Well, what that leaves us with now is that we have a high that has volume. That's the bottom line, okay? That's really positive. No doubt about that. Okay, so now let's get closer. Now we're going to come into, and I'm going to bring this back to the continuous, no, I'm bringing this back to the live contract. So when you get closer, what has happened is this. And if you have the out of time in the trade, you know that the bottom line is that when you do 100% move for move, which we did, if we go back to, June, August, gold was traded at 1836. It goes all the way down to 1636 and gets all the way back up to 1841. Okay, that's 100% move or move. So when you make 100% move or move, you can expect a pullback. Now watch, then we put the volumes on it. Once you put the volumes on it, you're going to see that there's not enough juice to basically take it over. And one of the biggest parts of this, trust me, there was two different parts of it. The first part was when we did get the 197,000 contracts, and gold only went to 1832.40, and the high was 1836. That was a huge heads up, man. When you have volume that's coming into a swing point and you stop right before it and you can't take it out, that's a huge heads up, man. That, it'll be back up there, but not yet, okay? So then what ends up happening? Bottom line, we get a sideways move. Now we got to go to the dollar. We take a look at the dollar. And what you have with the dollar is that my take on this bounce that I'm thinking of in the dollar is going to be a counter trend move. I think, the highs of the dollar to me are over, okay? That being said, though, what has happened with the dollar is that, it's been a one-way move down since, last August. And I suspect you're going to get some kind of a dead cat bounce. And the reason I'm thinking that we get a dead cat bounce is twofold, folks. Is that, well, it's actually threefold. The broad markets are an ABC structure down, and that is the S&P and the NASDAQ. The dollar has already done a nice correction on the way down. Gold can't get to a high. So when you put that together, that's telling me that, okay, I get this. The dollar wants to do a dead cat bounce, 38, 50%, 618, whatever that's going to be. As that happens, we'll see the ABC structures finish in the broad market. And when the ABC structures finish in the broad market, guess what? Gold and silver will be the buy, and it'll be a hard buy. Because I think when this flips, we're going to see this go down very quick. And my take, though, is that it is only going to go back to the strength. And if we take a look at the GDX, when I'm taking a look at this, when I say go back to strength, you know, we're talking this bar here from the 8th of November. The top of that is 26, the bottom's 25. I expect it's going to be a fast one back. The volume will dry up there. And then, all aboard the night train. You stay right there, folks. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down at 225. NASDAQ is off 82. S&Ps are off 31. And let's go over to Coinbase, okay? Because this is like just pretty wild. So if we take a look at Coinbase, let me see how this shakes out. I got it. Okay, so we'll put this first on a 4-year weekly. Okay, so on a 4-year weekly, oh my God, the March low is $40.81. It's below that. I got to put this on. Okay, so here you go, folks. This is what's going on. So Coinbase, we got to see this. Okay, so Kathy Wood just doesn't stop, man. This is like so sad. It's incredible, actually. There she is right there. Look at this. Oh, this isn't even posted yet, evidently, I guess. But she's still buying. She was buying yesterday in Coinbase, which is just pretty amazing. And then if we go into Tesla, of course, well, no, let's do this. Let's go to ARK, because when you see, it's pretty incredible you know, that I'm trying to figure out is, you know, when we all start in the marketplace, right? The market's very hard to kind of understand because it's really not taught anywhere, right? So what I'm trying to figure out right now is this, is that is there actually less education out here in general for investors? And the reason I'm saying that is that when you hear these numbers, this is unbelievable. I mean, and the numbers that I'm going to give you right now, folks, this is the numbers. So picture this. This ARK Innovation ETF, okay, you know, bottom line, unfortunately, has gone from $158 down to $30, okay? And most times, in fact, this is the first time I've seen this, and I don't know if it's the first time it's ever happened, but that as equity keeps going lower, money keeps coming in. So in Kathy Wood's case, listen to these numbers. This is unbelievable, actually. So, you know, needless to say, she's had a bad year, right? In the past few weeks, you know, bottom line, she's had a tougher one, okay? So right now, her fund is worth, the capital, let's see what the market cap is. Right now, the market cap is $5.9 billion, okay? Now, listen though, that this is what you want to wrap your head around. And this is what I'm talking about as the aspect of, you know, like, it's amazing to me that people just keep pushing money in, okay? Now, in this whole downdraft, she still took in a positive $1.3 billion this year. $1.3 billion. That's a monster amount of money, folks, okay, that she actually took in. Now, that is a far cry from what she was taking in, because listen to these numbers, okay? So the reason she became so famous is that in 2020, right, her fund was up 150%. So you can imagine why, hey, funds go up, you want to put everything in, right? I'm not saying that that's what people do. But the bottom line, amazing run, right? Well, that being said, is that when she was up that kind of money, what she had done is this. Listen to this. They put in $4.6 billion in 2020 and put $9.6 billion in 2021. Now, well, she's at $1.3 billion. Bottom line is that there's still trouble. I mean, when you look at these holdings, this looks to me like this is going to be a Janus deal. You know, if you're familiar with Janus, you know, in the aspect of 99, 2000, because the holdings that she has, she's doing the classic that any technical analysis or any type of money management would tell you that you don't do, is that double or triple, quadruple down, and she's been doing it in a monster way. And the equity, so her biggest equity is Zoom Video, okay? So let's go to Zoom. She inside that fund, okay, it's almost 10% of the fund. Well, Zoom Video, if we take a look at Zoom's trading right now at a price point of 67. We pull this back, we take a look at it and say, okay, you know, bottom line, this equity went from, you know, $588 down to $67, right? If we take a look at the aspect of, you know, so let's say that she's absolutely right, okay? That she's absolutely right that, you know, her game is that she's getting into things that people are going to need in the future, right? Even if she's absolutely right, I want you to just look at something here for a second. That right now, they say this year they're going to make $4.4 billion, okay? And they're going to bring $3.84 to the bottom line. And then you take a look at the PE. Well, the PE, folks, even at this price, is 17. So the kicker here is that the average price of the S&P is 14 and a half, okay? So this is a company that's growing, right? Let me just look at it again. And it's growing in a very large way. If it continues, it's growing approximately 35% a year in American emerging markets. It's growing by 65%. You know, so those are good numbers. There's no doubt about that. You know, the bottom line, in order to basically get any traction going, I can't imagine how far those equities have to come up. The thing that is a mind blow to me of all of this, though, this was going to go back to the aspect of, you know, the education value inside being an investor. You know, when you read some of these stories, when I was reading this particular story here, you know, a couple money managers said, well, these are investors that, you know, like, why would someone, you know, put it in and say, okay, well, this quote here is, well, you clearly have a longer-term investor who believes in disruptive innovation, and they want to have a small, you know, holding in it. It's a sleeve in a portfolio. I think they're going to be wrong, man. I just think that, you know, I would question the aspect of doubling and tripling down on the exact same equities, and in particular, pull up another one of these, because it just doesn't stop with these things. I mean, the portfolio itself, everyone else would be out of business. Let me tell you something. You'd be out of business in a second. If this is a hedge fund, they would be out of business a long time ago. You got Exact Sciences, 8%, Tesla, 6.5%, Shopify, oh my God, let's go to Shopify. This is an equity, same type of deal. Now, I can picture Shopify getting extraordinary bigger. There's no doubt about that. But if we take a look at the numbers in Shopify, you know, bottom line, this is a company that's not making money. I don't think it's ever made money. No, it's never made money. And, you know, you're taking in $5.5 billion. We take a look at this, it's like, okay, you know, if you don't make money and you're taking in $5.5 billion, I mean, what school gets, where did they learn that, man? And with Shopify, went from $176 down to $23, and now you're at $34. Problems, Childs, man, in a big way. Stay right there, folks. Come right back. We have the Dow. Dow Industrials down 179, Nasdaq's up 73, S&P's up 26. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 171 to get the Nasdaq off 70. S&Ps are down 23. Now let's go take a look at the bond market, because bonds, no doubt, are running the market in a monster way. So I'm going to take a longer-term view of this. We're going to put this back. I get the continuous contract up there, so we're going to put this back 15 years first and see what I come up with. Okay, look at that. See, I got to put it back more than 15 years. This is unbelievable, actually. So let's go 30 years. Let me see. Right there, 30. Oh, hit the wrong one. Come on. There we go, 30 years. Okay. So, look at this thing, man. So, look at it. It's been a straight line move. This is the 10-year. Straight line move down from 140. The low 108. Now, as you're looking at this chart, you can see that, there's no doubt we've had a lot of trading here, back in the 90s, okay? That being said, I suspect this is a larger ABC structure down. So we put it this way. If it is, that's 122. Okay, so that's a 108. You got 14, gets you 101. Okay, so let's go see where 101 is. Change this and put this. I'm going to put it on a quarterly chart now, because I have to just to find out where this thing is. Okay, so let's take a look here. Come on, there it is. Okay. So now 101, there it is down there. Okay, so it's not even 101. That's back to it's back to 2000, actually, just about. So the way this is shaking out, folks, okay, we're going to get support on the 10-year at approximately 108 to 104. Let me see what you hit already. No, so you already hit the 108. That's what the first time down, the 108, the tops of these lows saved the bond market the first time. This is going to build cause. Next leg down is 104, and the real leg down is 101. And if that's what we get, then what you're going to have there is that, this brings us all the way back to 2006, and maybe that's where we get the turn, This thing, see, the key inside of the currencies and the bonds don't have to actually, the Fed fund rate, even though let's look at this for a second. If we put the Fed fund rate up and take a look at it, what you're going to see, right now the lower band is 425, the high band is 450. They're going to bring that up to 550, okay, so 5.5%. Well, if it just stays at 5.5% for a year and a half, the Fed will get the job done, meaning that the amount of jobs will decrease. And right now, folks, they're still increasing. And one of the main reasons is that when we brought up that M1 money supply, is that the amount of, let me bring this up. There we go, right there. M1 money supply. Watch this. Oh, no, one second. Search M1. Let's do it that way. Because when someone had me bring this up, when you see this chart is like insane. I mean, it's hard to even comprehend the amount of cash that is still floating around. Or maybe M2. Let me see. Let me try M2. So M2. Oh, yeah, there it is. Beautiful. There it is. Okay. Okay, so I bring this chart up and take a look at it. Look at this chart, man. I mean, like, this is like unbelievable. Now, what you can see, oh, this is cool since the last time I brought it up. Look what's happening here, folks. See how it's pulling down? Slightly. This is a monthly chart, but you can see that the peak, here's the peak. The peak, March, this is unbelievable, actually. It's March of this year. That was the peak. And you can see you went sideways, then you start blurping down. Like right now, if we brought this over, we're back to where we were in December of 2021. Now, this thing, the way that this will work is that 2017 is that the longer that the Fed, look at this, man. This is sick. So I just brought this back 20 years, folks, all right? And look at this. Like, we were way down here. And this is where, if you've been in the market for a long time, this is what the Fed put was all about. Every time the market would go, down a bit, they'd say, no, buy the dip. And you can see the money supply keeps going up, and then exploded topside. In fact, it's amazing that I have a feeling that this is, well, going back in 2002, look at this one. It went sideways a bit. This is unbelievable, actually, because what's unbelievable about it is that the only mirror of your portfolio, I love it. Well, that's a good portfolio going all the way up like that, even with the pullback. Now, this is what's intriguing about this. So picture it. That would make sense. What's intriguing about it is money is coming out of the economy. And they're going to have to leave high interest rates, well, we think they're high right now, for a much longer period of time. Because what you're going to see is this has to go much lower. The thing that's so intriguing to me about this, let's put this, I want to put this even bigger. I'm going to put this, the most I can get is 50 years. And the reason I want to see this is that because this is the first time that I've seen it actually go down. Yeah, on this whole chart. So look at this. On the whole chart, this is pretty something else, man. On this whole chart, look at this. So that should give you a heads up that they're serious, about getting inflation under control. I suspect that if I could bring it back further, and I can't. See, I can't bring it back more than 50 years, is that we would see maybe it went down in the 70s because it was in inflation. I bought my first house in 1970. It was 14.5% interest rate. But as when folks, unfortunately, what happens is that if folks haven't seen a higher rate, right? There's plenty of people who say, oh, yeah, there's been higher rates before. You have to have the correlation, folks. The higher rates that before, in my particular case, I've just told you the story. I bought a triple-decker for $14,000. It was a 14.5% mortgage, yes. I think I had to put down, who knows, 1%. It was something like, insane. It was hardly no money. I was getting rent at $250 on the top floor. I lived on the middle floor, and I had a restaurant on the first floor. That same house now is worth basically $2 million, okay? So when you're getting a $2 million loan and you're paying 6%, or you're getting a $14,000 loan paying 14.5%, this is the stuff that you can play with in your head all day long. But simple common sense is who can afford those prices, right? I mean, that's the bottom line. So I suspect what's going to happen, you get a pullback. Time is the thing that heals things, by the way, okay? So you pull back, you bounce along the bottom, this is going to take like 4 years on the real estate part of it, and prices are still going to have to, go up somewhere. They're going to find somewhere to find that money, somewhere to live. Stay right there. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrial's down 83, Nasdaq's off 31, S&P's down 12.5. Well, Elon Musk, okay, this just doesn't stop, man, with him. He's got a little present. So you got... This is absolutely right in Tampa and Orlando, folks. Bottom line is that, you know, he's into free speech, all right, except inside his company, because he just got whacked for, let's see, the automaker. This is from the National Labor Relations Board. The automaker broke the law. And this is the Tampa Regional Director, as he told employees not to discuss their pay with other persons and not discuss another employee's termination. But then on top of that, Tesla management also repeatedly told employees not to complain to higher level management. Tesla's got so many problems, that's insane. You know, not in my backyard. That's the whole bottom line. Yeah, talk, walk. Yeah, bottom line, he's not talking, walking, or squawking in a way. And I suspect that's just going to be the beginning of good old Elon coming into the 2023. Market-wise out here, bottom line is that you're going to finish really flat. If we take a look at the SPYs, you're down $12. That's nothing inside compared where we are. So you get a sideways move. You're down $1.20. Does 61,000 contracts. Things will start hopping when we get back to work. There's no doubt about that. It's the third we come back. We're into 2023, and we'll see where the rest of this goes. You will get a lot of that. Let me bring the yen up because they were buying bonds handed over fist last night in Japan. And you can see they got what they wanted done. It didn't hit the low, though. The low is 130.58. We got to 130.78 last night. And you can expect more of that come Sunday night, you know. And then what will happen is that the Chinese New Year starts a little bit after that. So always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great weekend, folks. Have a safe weekend. No drinking, no driving. We want to see everyone back. All your family wants to see you. Friends want to see you. And here's to amazing 2023. Go get them, folks.